Good afternoon, SuperGrowth MultiBaggers. We help subscribers build portfolios of quality, high growth, low debt stocks. And today we're going to take a look at one of particular interest, PTC Inc., a producer of CAD/CAM software, project management software that they increasingly offer on a subscription basis. For years they just sold the software. Now it's in a SaaS format, and the company is experiencing rapidly growing sales, gross profit, free cash flow, and simultaneous improvement in balance sheet strength. Particularly interesting situation. We'll also talk about the research that underlies the discovery of this stock, software we've just developed that combs through the financial statements of all public companies, looking not only for growth, but for accelerating rates of growth accompanied by accelerating rates of financial strength improvement. We'll start with a quick look at the overall market. So our assessment of the current risk in the market, fairly high. New purchases, 6% of cash. We've gone, I think this morning when the market opened, we were at 4% of cash, and the algorithm, looks at the relationship of not only the S&P, but the approximately 100 fastest growing companies traded on U.S. exchanges. And it's been vacillating back and forth between 4 and 6%. Whatever, it doesn't matter the specifics, doesn't matter 4 or 6. The market's high. I think it's kind of risky. You look at this is a hourly chart. There's nothing. Today's drop was perhaps a little more precipitous than has been the case. Is generally the case, but the market is look at this. We look at the daily over the last couple of years. We look at the weekly, and this gathering momentum you see here, that's low interest rates. That's the amount of liquidity flowing around in the economy right now. And I'm not saying that's a bad thing, but it's bringing market levels to definitely somewhere where caution is in order. So that's all I'll say about that. Despite all that, we were buyers today, and we bought 4 stocks. Subscribers get all that stuff, and I won't share it all with you, but I'll just say we are going to talk about one that we were buying today, and particularly interesting company that's made the migration from selling software to offering it on a subscription SaaS basis. And there happen to be in a market niche that where they can offer their customers tremendous efficiencies that way, and the company's revenue and earnings have taken off. So let's take a look at that. PTC Inc., a company that produces CAD/CAM software and project management software. In the written report that accompanies this, it has excerpts from an interview of the CEO and also an analyst who seems to offer a particularly knowledgeable and informed perspective on this area of SaaS software, and it's worthwhile reading. And there's a link in the article to the entire Seeking Alpha article on the company. But here we see a company that's gone through lots of ups and downs. We try to program the software to avoid that unless there's been a breakthrough, and the fundamentals support continued growth. And I think that's definitely the case with this company. We look at the momentum chart. We see some volatility here, improvement, decline. This is rate of growth as opposed to growth in absolute terms. So when you see something like this, it's growth stronger than the prior 12 months periods. Each of these represent 12 months, end at 3 months, rolling in succession. So that tends to remove some of the extremes. But when you look at financial statement trend in terms of financial statement overall strength, you see a very strong trend here starting in December 2019. And this is a characteristic of companies that I don't see talked about much, but I certainly say in our experience, when we see companies with significant, consistent improvement in financial strength, it's often accompanied here. This is that middle red graph here. It's often followed shortly after by significant strength in the stock price. Looking here at growth, revenues, gross profit growth a little stronger than revenue over the last 5 years, but both strong. Operating free cash flow, way stronger. That's ability to scale. That means that the company, with every dollar of increased revenues, profits are added disproportionately. And here we have free cash flow growth per share. And yeah, major improvement. This is an interesting situation. So I guess we'll leave it there for today. A company to keep your eye on, a company to watch and read about, study, and see if it fits well in your portfolio. And thanks for your interest, and I'll see you later in the week. So I guess we'll close with our website URL, supergrowthmultibaggers.com. If you'd like to subscribe to the research, you can do it there. You can also sign up to receive this in your inbox, a written report together with the link to the YouTube video in your inbox each day. Go to the sitemap. I think in the footer at the bottom it also has that. Here on YouTube, please leave any comments. Click like if you like it. Click subscribe if you want to keep up to date on our future reports. And thank you again for your interest in the research, which is a, all-consuming obsession with me, is understanding the markets and investing my hard-earned money in the most innovative, unique, dynamic companies in America.